Please remember to like this video and subscribe to our channel.
So, you're an entrepreneur, and you've set your sights on the Netherlands. You've probably heard those two little letters thrown around a lot, BV. But what does that actually mean for you? Well, think of this as your complete playbook for turning that big idea into a real-deal Dutch company. We're going to cover everything, from protecting your personal assets to the smart tax advantages.
All right, before we dive in, we have to do the responsible thing. Just a quick heads up, this is your roadmap, your guide to understanding the whole process. But, and this is important, it's not official legal or tax advice. Your business is unique, so you absolutely should chat with a professional notary or accountant to get advice that's tailored just for you.
Okay, with that out of the way, let's get to the exciting part. Building a company is so much more than just paperwork, right? It's about setting up a solid foundation for your growth, for your future. So the real question is, are you ready to build your Dutch empire? Let's start with the cornerstone. So what in the world is a besloten vennootschap, or as everyone calls it, a BV? The easiest way to think about it is that it's the Dutch cousin of an LLC in the US or a limited company in the UK. But here's the key takeaway, the absolute most important part. It builds a legal wall between your business life and your personal life. That means if the company ever gets into hot water, your personal stuff, your house, your savings is safe and sound. That liability shield is probably the #1 reason founders go for a BV. Here's a quick look at our game plan. First, we'll get into the why. Why a BV? Then, we'll talk strategy with your pre-set-up game plan. After that, we'll walk through making it all official, what it takes to run your new company day-to-day, and then the fun part, how to use it to optimize for growth. Let's kick things off with that big question. Why bother with all this? Why set up a BV when you could just be a sole proprietor? Well, the answer is all about building a rock-solid foundation for whatever you're planning to build. This chart really lays it all out. As a ZZP or sole proprietor, you are the business. There's no separation, which means your personal assets are always at risk. A BV, on the other hand, limits all liability to the company itself. Then there's tax, which is a huge deal. With a ZZP, all your profit is just taxed as your personal income. A BV gives you way more flexibility by separating corporate and personal taxes. And for the future, a BV makes it super easy to bring on partners or investors by issuing shares. Plus, let's be honest, it just gives you a more professional look with bigger clients. And check this out. This visual shows you the tax advantage perfectly. As a sole proprietor, your profits can really quickly get you into that top personal income tax bracket, which is sitting at nearly 50%. Now compare that to a BV. The profits are first hit with a much lower corporate tax rate, starting at just 19%. That means you get to reinvest a much bigger chunk of your earnings right back into the business, instead of giving half of it away to taxes right off the bat. I absolutely love this quote because it just completely reframes how you should think about this. The fees, the paperwork, that's not an expense, it's an investment in your company's infrastructure. You're building a vehicle that's safer, more scalable, and way more tax efficient for the long journey ahead. Okay, now let's get into your pre-setup game plan. Before you even think about picking up the phone to call a notary, there are a couple of really big strategic calls you need to make. This is all about getting your strategy right before you build the structure. So this right here is one of the most common and smartest strategies in the Netherlands, the holding structure. Look, a single BV is totally fine for a simple business, but a holding structure, that's next level. It separates your valuable assets from your day-to-day operations. Think of it this way. The operating BV is your workshop. It's where the work gets done, where the risks are. The holding BV is your treasure chest that sits safely on top, holding all the good stuff. Profits, your brand, your intellectual property. This structure is an absolute game changer for protecting assets and making a future sale way easier. All right, once you've figured out your strategy, it's time to make it official. I know this part can seem a bit intimidating, especially when you're dealing with another country's legal system, but honestly, it's a super clear, well-trodden path. Let's break it down. It really boils down to these 4 simple steps. First, you just find a civil law notary who speaks English. And trust me, there are plenty. You'll give them some basic documents, like your ID and proof of address. Then you sign the deed of incorporation, which, by the way, you can often do remotely over a video call these days. And as soon as that's signed, the notary registers your company with the Chamber of Commerce, the KVK. And boom, your BV is officially born.
This quote from a Dutch notary really just says it all, doesn't it? It perfectly captures the vibe for international founders. These notaries are totally used to working with expats. They'll walk you through everything, make sure you understand what you're signing, and they do all the heavy lifting. So really, don't let a potential language barrier worry you for a second. So, what does this infrastructure investment actually cost? You know, a really good rule of thumb is to budget around €1,000. That typically covers all the notary fees for setting up both a holding and an operating BV, and it includes that one-time registration fee for the Chamber of Commerce. It's a pretty clear and manageable cost for such a powerful setup. Congratulations, you did it! Your BV is incorporated, but the journey's not over. Now the focus shifts to actually running the company and, staying on the right side of the rules. So let's look at the essential first steps you'll be taking. Yeah, things move pretty fast once you're incorporated. In the first couple weeks, expect some official-looking letters from the Dutch tax authorities, the Belastingdienst, giving you your tax numbers. That's your signal to go open a business bank account and get a good bookkeeping system in place. Seriously, getting these basics sorted out early will make your life so much easier. Now, this is a super important rule every single BV owner needs to know. It's called the gebruikelijk loon, or customary salary. Basically, the tax office wants to see that you're paying yourself a reasonable salary and the income tax that comes with it before you start taking out profits as dividends, which are taxed lower. For 2024, the benchmark is €56,000, but it's not set in stone. If you're just starting out, you can often argue for a lower salary. The key is just to be sensible about it. And here's your new ongoing to-do list to keep your BV happy and healthy. You'll be filing VAT returns every quarter, an annual corporate tax return, and you'll need to file some simplified annual accounts with the Chamber of Commerce. Oh, and you also have to keep something called the UBO register updated if the ownership of your company ever changes. Okay, we have covered the setup, we've covered compliance, now we get to the really exciting part. How to use your BV not just as a company, but as a strategic engine for building long-term wealth. This is where all that initial setup really starts to pay off, big time. This slide breaks down the core financial strategy. You've got two main ways to pay yourself: salary and dividends. Your salary is a business expense, and you pay personal income tax on it. Dividends, on the other hand, are paid out of profits after the company has already paid its corporate tax. So the smart play is to pay yourself a reasonable salary that covers your living expenses. Remember that customary salary rule, and then take any extra profits out as more tax-friendly dividends. And this just brilliantly shows the true power of that holding structure we talked about earlier. First, it protects all your accumulated profits in a totally separate company. Second, thanks to a beautiful rule called the participation exemption, you can move profits up to your holding completely tax-free and then reinvest them. And here's the best part. If you ever sell your operating company, the money from that sale can flow into your holding, again, completely tax-free. That gives you a massive war chest to fund your next big adventure. So, at the end of the day, a Dutch BV is so much more than just a legal entity. It's a really powerful vehicle. You've just learned how to build it, how to fuel it, and how to keep it running smoothly. So now, the only question left is, where are you going to drive it?
So if you like this video, please like it and subscribe for more content.